Hey, well, it seems like it's total panic in the housing market because median sale price, despite what a lot of people thought would happen in 2024, it looks like we're going to end the year with higher home prices this year than we had last year. And that's nationally. And in many metros, that's what we're seeing in the data. Not only that, but according to the latest Redfin report that we're going to review today, it looks like for the first time, uh, new listings for the first time in a while, new listings are lagging pending sales, meaning we're taking away inventory from the housing market. We're not adding any inventory right now nationally because active listings right now are actually under 1 million units, according to the latest Redfin data. So that's what we're going to cover today. I'm the housing nerd. Welcome to my channel. If you're new here, thank you for joining us. I do this Redfin update every week once the new data comes out from the Redfin weekly data report. So today is no exception. We're going to go over national numbers when it comes to Redfin info. Then we're going to go over metros as well. And, a lot of people are wondering, should I be buying a house now? Or do I need to wait till 2025 to buy? So hopefully some of this data today can give you insight as to what you should do with your home buying or your home selling or your investing journey. Maybe even if you're a realtor, this can help you shed some light on what's happening as far as a 30,000 foot view. So again, welcome to my channel. Thanks so much for joining us. The schedule today is basically national update, then the metros. And today on the metro list, I have Ohio, of course, because I'm a realtor and an investor just outside of Columbus, Ohio. But so we'll do the Ohio markets. We're going to do Columbus, Cleveland, Cincinnati. I also have a request from some people, Imperial County, California. I also have Tucson, Arizona that we're going to cover. I've got Phoenix. I've got Pittsburgh. I've got Milwaukee, Denver, Austin, Atlanta, and St. Louis. I don't think we've looked at St. Louis before, so we're going to look at St. Louis. But if you have a metro you want me to analyze, put it in the comments below. Even if you're watching this on the replay, go ahead and drop it in the comments, and I'll get to it on next week's live. I'll get to your metro. So anyway, again, thanks for joining me. Let's get started. And I would love to know if you have any comments during this, like, hey, I don't like what you're saying, Jason, or I have a question about it, or this is what's happening in my metro. That's what I really want to know. Like, when you see these numbers on the screen, what's going on in your metro? Are you seeing a lot of homes for sale? Are you seeing home prices going up? Are they going down? What's happening? So it helps having some local flavor to the show. I got some people saying hi. King Glizzer. That's kind of a cool name. All right. What's up, King? How you doing? Artalis. Hey, still on the grind here. I still feel locked up as a move-up buyer. Interesting. Yeah. A lot of people do right now. A lot of people feel locked up because they're like, well, why would I buy it? I don't know if this is your situation, but a lot of people are like, why would I buy a house now that's more expensive, right, than the one I have? Like, if you're locked into a low mortgage rate, that's what I assume you mean, and a low payment, relatively low, like, why pay more just for a bigger house or maybe a nicer house? If you can afford to do it, then do it. But if not, a lot of reason just to sit. And I'd argue if you have a 30-year fixed mortgage rate, with a really low rate, I'd say don't sell at all. Like, hang on to that thing, even if you buy something else. But thanks for joining us. Do we know why inventories remain low? We're going to cover that today. So thanks for asking that question. Sellers aren't dropping prices enough in my area. A lot of sellers have equity and are not motivated. Right. Yes, I agree. Again, tell me where you're from. I don't know what market you're in, but I don't remember. But yeah, that's the case. I'm seeing the same thing. Like, I'm helping some home buyers right now buy some houses, and first time home buyers, and like, what I do is I call expired listings. I called canceled listings. I call listings that have been on the market for 90 days, and to find out, hey, are you willing to move on your price? And when I'm talking move on the price, like homes that are listed at 300, I'm saying, hey, we'll make an offer, but it's going to be like 200,000. And there aren't a lot of people willing to move a lot on price right now. So you're right about that. I have a 2.75 rate and I'm renting it when I purchase a new home. Right on. Sweet. That's great, man. 2.75%. Can't beat that. Shoot. That's a great rate. Ah, in San Antonio. Awesome. Hey, thanks for that local information. I appreciate it, dude. All right. I'm going to get to this data now. I'll come back to the comments in a second. All right. So let's jump to the Redfin article. Whoops. I got to take his comment off. I need like an assistant to do this. All right. So this is the Redfin article. This kind of tells us, gives us an overview of what's happening, based on the last 4 weeks. That's how they're doing it. Home buying demand sitting near highest levels since early spring as mortgage rates fall. Okay. Well, we're going to find out what they mean by home buying demand is high now, or it's gone up a ton, I guess. Home tours, mortgage applications, and pending sales are rising as mortgage rates decline from the 4-year month they hit in late November. More sellers are coming off the fence too. Okay. Mortgage rates are declining after last week's cooler than expected jobs report made it clear that the Fed will cut interest rates again this month. The average weekly rate is 6.69. I checked today on Mortgage News Daily. It was 6.80%. From what I saw today, but they're saying here the weekly average rate, they're tracking 6.69%, down from a 4-month high of 6.84% 2 weeks earlier. That's pushed the typical U.S. home buying monthly housing payment down to $2,500, the lowest level in 2 months. Redfin's Home Buyer Demand Index, a seasonally adjusted measure of tours and other buying services, is up 8% year over year, just shy to its highest level since April. And mortgage purchase applications are up nearly 20% from a month ago. I think they're up 4% year over year. We'll see that in a second in the chart. Pending home sales rose 4.1% year over year during the 4 weeks ending December 8th, similar to increases we've seen over the last 2 months. Watch this number, this pending sales number. Pay attention to the pending sales and the new listings. Declining mortgage rates are one reason why home buyers are hitting the pavement. But there are 2 more impactful reasons demand is improving. The financial uncertainty surrounding the presidential election has passed, and buyers have accepted the fact that mortgage rates are likely to remain above 6% for the foreseeable future. So Redfin has been beating this narrative that, hey, up until the election, nobody wanted to buy. And I, being at open houses, on the weekend, I think I spent like 10 weekends in a row at open houses, holding them for listings I have. And there was not a lot of traffic before the election. Then right after the election, got more traffic. So I don't know that they're incorrect, but I'm surprised that so many people kind of sat on the sidelines before the election. And now they're like, all right, time to buy. But they're saying, hey, now that the election's passed us, there's less financial uncertainty, I guess. Is there really? I don't know. And people have accepted that mortgage rates aren't coming down. And I agree with that. I would not be shocked if mortgage rates did not drop under 6% next year. So if you're, out there thinking, hey, mortgage rates are going to come down to 5% in 2025. Right now, that's not what the tea leaves say, I guess. This week's data shows the increase in signals. This week's data shows the increase in signals like home tours and mortgage applications from the last month is continuing. The recent decline in mortgage rates isn't pushing demand to new heights, said Chen Zhao, Redfin's economic research lead. Rather, demand is settling into its new post-election normal. In the months leading up to the election, house hunters were hibernating. Demand was slower than we would have expected, even with high mortgage rates. Now, early stage home buying demand has jumped up to where we would expect it to be. On the selling side, new listings are up 7.9%. Okay, a good increase. We like that. Year over year, the biggest increase since June. Sellers are becoming more active for similar reasons as buyers. Additionally, some sellers are listing in hopes of taking advantage of the increased demand we've seen over the last several weeks. Okay. That's what they're having to say about the housing market. Tell me what you think from that narrative. Yeah, some things in there make sense. Some things are kind of strange, but we'll look at the data now. So daily average fixed mortgage rate, 6.75% as of yesterday. I checked it today, 6.8% from Mortgage News Daily. We know about the weekly average rate. Mortgage purchase applications down 4% from a week earlier, but up 4% year over year. Redfin Home Buyer Demand Index up 5% from a month earlier, highest level since April, except the 4 weeks ending November 17th because of Thanksgiving, up 8% year over year. The Home Buyer Demand Index from Redfin. Google searches for homes essentially unchanged from a month earlier, down 7% year over year. So I would say that's probably like one of the better indicators. I'm not so sure there's a ton more demand coming back necessarily. There may be a small uptick overall, but if people aren't Googling homes for sale more than they were a month earlier, and they're still Googling it 7% less than they did last year, that would tell me there's just less overall interest in the housing market. All right. Now we're going to look at the top metros, the top 400 metros. They use those metros to pull metrics for median sale price, new listings, stuff like that. This stuff, some of it's, well, the new listings, the pending sales, I think are the most important part here. Median sale price, $383,000, call it $384 if you're rounding up. That's 6% year over year. Now, if you watched my videos from earlier this week, got a lot of good feedback and a lot of good questions about the videos about 2025 prices. Melody Wright is somebody who I highlighted yesterday in a video and said, hey, home prices are going to end 2024 lower than 2023. So according to Redfin's data anyway, we're up 6% compared to last year. She said it would end 3 to 5%. So we're talking in the next 3 weeks, basically between now and the end of the year, 2.5 weeks. I guess she's thinking home prices are going to tank that much. You know, you're talking almost 10% swing. I don't know. That'll be challenging to do. Median monthly mortgage payment, $2,500. We know that that's the lowest since September. Great, still really high. This is the big one, folks. Look at this. Pending sales, 63,524. That's up 4.1%. New listings, 63,168, up 7.9%. What does that tell you? What do you see there? You see that we actually are selling more homes, or more homes are going into contract than we're adding to the market. If you want a housing market crash, if you're looking for a housing market correction, you need more new listings than pending sales. This is the first week I've seen this. Will it continue? I don't know, but I hope not. Because if we're taking more than we're giving, eventually you will dwindle that supply, right? And we can see it now. Look at active listings, 980,000. That's only up 11.3% year over year. 11.3 versus last year. Not 50% more inventory, 11% more. And it notes that's the smallest increase since March. So obviously, when you're in the winter, you're going to add fewer houses on the market. Less people are going to list their home for sale. That's just how it is in the winter, right? And then in the spring, more people list their homes for sale. But we've been so bad. The new listing numbers have been so bad, so low. And demand has been crushed, you know, from all indications, that it's like strange to see more houses selling than we're adding to the market. I would say that's a bad thing. We don't want to see that. Don't want to see that. Months of supply, 4.1. Basically, that's how many months we have of inventory if we don't add anything else, and we keep the current sales pace. We sell out of all of our inventory in 4 months. That's what that means. Share of homes off the market in 2 weeks or less, 27%. Median days on market, 43. Share of homes sold above list price. Can you believe almost, well, I guess now 24% of all homes are selling above list price, down from 26% last year. Average sale to list price ratio, 98.5. People are getting what, 1.5% off on average compared to the list price. So it's not like it's a massive discount, but they're not paying over asking on average, which is good, right? Except I guess a quarter of people are. That part still needs improved, but homes are sitting longer. Median days on market, it's up 7 days. That just means people are, our homes are just sitting longer on the market, which is good. You want more time to make a decision. All right, metro level highlights. This is where they take the top 50 most populous U.S. metros, and then they look at the, best and worst areas of the U.S. Median sale price, where it's gone up the most: Miami, Warren, Michigan, Milwaukee, Cleveland, Believeland, West Palm Beach, Florida. It went down in one of the top 50 U.S. metros, declined in one metro of the top 50. I mean, that's like, I'm really surprised, to be honest with you. Like, I look at that and go, man, at some point, you got to think there's going to be a lot more homes or a lot more metros that are on the decline list, right? So far, no. So far, just one on the decline list. Are you surprised by that? I am. Pending sales. Where are homes, I guess, going into contract the most? Year over year, as far as increases year over year, not just sheer numbers, obviously. San Jose, Los Angeles, Cincinnati, Jacksonville, Anaheim. That's where homes or pending sales are growing the most. Houston, Miami, Detroit, Orlando, West Palm Beach. That's where they are not coming on the market the most. So pending sales are down the most in those areas. Declined in 8 of the top 50 metros, pending sales. So 42 of the top 50 metros had increases of pending sales year over year. More activity. New listings. Where are we adding the most new listings year over year? San Francisco, Columbus, Ohio. Hey, look at that. Right near where I live. Seattle, San Jose, Washington, D.C. Where are they not being added? In San Antonio, right where our boy Talus lives here, our Talus. San Antonio, Orlando, Newark, New Jersey, Atlanta, and Portland. So it declined in 9 metros. New listings declined in 9 metros. I mean, those areas where it declined, it just means that we're not adding enough inventory. And so this metric right here, guys, this new listing metric, I mean, this is the signal of distress. Meaning, if you want distress in the market, or you're waiting on foreclosures or delinquencies or carnage in the market, you need to look at new listings, specifically in your market, like not just your metro, but like down to your school district or your neighborhood, and a realtor can pull that information for you down to a micro level, and look at new listings and see how they're trending. If new listings spike a ton, and when I mean spike a ton, like look back in history and say, what did we have before the pandemic? And if you see new listings climb rapidly, consistently, they're climbing, that could be a sign that there's distress because people are rushing to list their homes. If there are less new listings, that generally means, to me, well, people aren't very desperate to sell their homes. There's not widespread distress, right? So anyway, just kind of a tip on what to look for in your local market. Okay, median sale price. These are like the charts that Redfin puts out. They're static. You can't really do anything with them except stare at them. We'll buzz through them. Median sale price, you can see where it's gone right now, up 6% year over year. A lot of people just predicted, and they still are thinking, that this is going to end up down here underneath this line. So for this to end up, for us to have a year over year price decline, this line would have to, next week, would have to show it going straight down. So it ends up under 2023. I don't see that happening. Stranger things have happened, right? Can't say never, but it would take like a lot of discounted sales to come through the pipeline really quick for us to get Melody's year-over-year price decline. All right, so that's median price. Now we got median asking price. How much are people asking for homes? That's still up a lot compared to last year. Still up 6%, $381,000. Home buyer housing payments, 3.8%. Up more than last year. I mean, look at this. It's up more than last year now. It's like at a 4-year high now, right now. Crazy. Pending sales. So you can see this is, well, it is hard to see, I mean, in this chart, but basically, even though pending sales are headed down, they are enough to take away inventory because we're not adding enough new listings. So look at this. Look at new listings. Way down here. It's not going up this way. It's still heading down, which it should this time of year, right? That's normal. The problem is we're just not adding enough new listings because look at active listings. Just look at this. Look at how it's going down. Again, it should go down this time of year. I mean, that makes sense. But if there was massive distress in the market, this would be going up. It would break seasonality, they call it. But it's not right now. It's not. So people at this point, overall in the market, and every market's different, but overall in the U.S., the indicators are not here that, hey, everyone has to sell their house. It's 2012 or 2008, whatever you want to say. It's a GFC all over again. You know, pull the fire alarms, cats and dogs living together, mass hysteria. Not seeing that yet. Maybe they'll live together here soon, but right now they're not. All right. 4.1 months of supply on the market. That's the pace at which we can. I'm sorry. That's a measure of supply and demand, basically, how many months of supply we have. 27% of pending sales under contract within 2 weeks or less. That's a 4-week high. I'm sorry, a 4-year low. My bad. Well, it's right on the line. But basically, that's, you know, how many homes are sitting on the market only 2 weeks and coming off before that 2 weeks is up. Only 27%. Look at back here in what's that, 2022? It was like 35% of homes were coming off the market in 2 weeks or less. Homes sold in a median of 43 days. That's a 4-year high, right? So it's taking a lot longer than it has the last 3 years to sell a property. That's good. That's a good thing. You want time to look for a home, you know? It was stressful, like helping people buy a home when things were nuts. Like back here when homes were sitting a median of like what, 29 days, 28 days. That was awful helping people find a home because you had to make an offer like that day. Like you would leave the home, my buyer would say, I want to make an offer on this home. Here's what I want to offer. And I would literally like have to run to a Starbucks or run to my office and jump on my computer to write the offer like right then. It was like, there's no time to make a decision. 24% of homes sold above final list price. That's good. We don't want homes selling above list price normally. I think historically it's like 98.5, 99%, right? Sale to list price ratio. So now it's 98.5%. Look at this. Back in the day, what's that? 2022, it was 102.5%. That's nuts, right? So like on average, people were paying 102.5% of homes of the price of the home. That's not sustainable at all in any situation. And when that was happening, that's why people just kept listing their homes at stupid prices because everybody was willing to pay it. Money was cheap at 3%, or like one of our viewers here, 2.5% or 2.75%. Who's counting at that point? Money was like almost free. So people would just, oh, we got to offer $10,000 more. No problem. We'll just do that. Redfin Home Buyer Demand Index. I don't put much stock in this one, and that's what they had to say from their article. Okay, now we do the deeper dive into the metros. Let's do that. So this is the Redfin weekly housing market data center, whatever you want to call it, I guess. The link's in my description below, but you go here and you can go to look at metro. You can look at county level. And again, even the county or metro isn't really detailed enough to make a buying decision, but it gives you a flavor of what's happening around you, right? That's kind of what it's for. So what we'll do is look at specific areas. I had somebody actually ask me about Asheville, North Carolina on Facebook. They were like, hey, what's going on with Asheville? So I helped them navigate to this data center. But, you got to think that there's going to be a lot of distress and carnage in Asheville because of just everything that's gone on there with the hurricane and the flooding. And by the way, just a quick shout out to Travis and Travis at Real Estate Mindset and Melody Wright, even though I give Melody crap. And I sometimes give Travis crap about on my show or my channel here about their price ideas or where they think prices are going to go and their predictions and kind of their bearish attitude. They have done a great job in helping the folks down there. Travis pretty much seems like he lives in North Carolina now and has spent a lot of time, a lot of his own money, I think. And Melody has too. She's right in the thick of it because I think she lives in Tennessee. So anyway, shout out to them. I hope they, I hope everybody's safe there and they, I'm just here in a basement doing YouTube stuff, but they're out there in the trenches helping people with the hurricane. So I wanted to give them a shout out. All right. Let's look at my first metro here, which is Columbus. So I do Ohio first because that's where I live. Had a lot of people ask me about Ohio stuff. So shoot, I got to put this in again. Columbus, Ohio. So somebody asked real quick, somebody asked in the comments here about why inventory was falling at the beginning. They asked, here he goes. King Glizzer. Do we know why inventory has remained low? So the reason why inventory overall has remained low mainly is, well, a couple reasons. One, you kind of had a perfect storm of the fact that demand spiked big time during COVID. The demand for housing, people started moving around a lot, moving to different areas, buying second homes, that type of stuff. So demand spiked pretty fast, and you can't really spike supply like that. So the supply side stayed where it was before the pandemic, right? And all of a sudden you had a ton of demand hit the market with low interest rates, COVID stimulus, you could say that. People at home, they don't have anything to do during COVID. So they started just, looking for houses. And I think there's a lot of FOMO buying, like my neighbor bought a house and now I need to as well. And so there was like a ton of demand that came into the market, but supply wasn't able to get caught up with that demand. So because of that, the housing supply was just wrecked. And then when interest rates spiked, you've got people that don't want to list their home for sale to buy the next one because they're like, why would I do that when I already have a house? So that move up buyer is not entering the market now because of interest rates being high. That's keeping new listings off the radar screen. And so that's why supply has remained stifled. And now it's dropping. Anyway, hope that helps. Good question, though. All right. So this is the Redfin data center. I'm doing Columbus. I always start with new listings on all these metros. So I've got new listings in Columbus. What do we got here? As we saw on the winners and losers category in the article, up 17.6%, call it 18%. That's a big spike in new listings. No doubt. I wonder if Ryan Day listed his house for sale. Not yet. See if he wins against Tennessee. But yeah, a lot more new listings in Columbus. It went up big time. That's good. We need more new listings here. That's encouraging. Active listings. Let's do that next in Columbus. So that's coming down, but now it's starting to head, maybe sideways a little bit. Maybe we start gaining some traction in active listings in Columbus in the surrounding area. That'd be good. That would be good. Pending sales. Let's do that next. Pending sales, Columbus, Ohio. Pending sales are up 10% year over year. I'm surprised to see that. They're actually improving too. I am hearing from a lot of agents here in Columbus that they're more active than they were for the last few months, which is weird because now we're getting to the slow season. But when you're in the basement, it's easy to come out, right? So we were in the basement with pending sales and new listings and active listings for a long time. All right, so it's maybe getting a little more unstuck. Let's do median sale price. This dropped, I think. It's kind of still going sideways, I guess, for the year. 7% up year over year, $336,000. Unsustainable or untenable, whatever you want to call it. It's just not good for the locals here who are trying to buy homes. Yeah, it's depressing, honestly. Even as a realtor, I think it's depressing. I just think prices are too high for the average person. Okay, so that was Columbus. We're going to do Cleveland now. Cleveland. And I'll get to your comments here in a minute if you have any. I haven't really looked. But I'll get to them as soon as I'm done with a couple of these metros. All right. 8% year over year new listings in Cleveland, Ohio. That's still a good rise, right? So Cleveland, or Columbus, we saw some more new listings. Cleveland, we got new listings happening. Active listings in Cleveland. Boy, this is insane. This is just ridiculous. Come on. I mean, only up 0.1% year over year, almost a 4-year low of active listings in Cleveland. That's nuts. Like you would think that eventually we would have more houses, on the market. Pending sales. So pending sales is up 4.9%. Yeah, so I guess we do have a little more pending sales in Cleveland, but it's not a ton, but it's enough, I guess, to eat away the active inventory we have. All right, median sale price up 10% year over year, $223,000. Wow. Median sale price in Cleveland it's been crazy this year as far as the growth of median sale price. Not crashing, obviously. Far from crashing. Good grief. All right, that's Cleveland. It's getting more unaffordable for the locals, no doubt. A lot of investors in Cleveland, a lot. All right, that's Cleveland. We're going to do Cincinnati. We do new listings in Cincinnati, Ohio. We are up 8.8%. Good. So a little more. It's like a 3-year high in new listings. Active listings in Cleveland. Wow. Look at the active listings. Cincinnati. Up 46% year over year in Cincinnati for active listings. 46%. Wow. Okay. Now, pending sales. How are those doing in Cincinnati? Geez. I mean, it's going down, but we are up 12%, almost 13% in pending sales. A lot more activity than last year. All right. And median sale price. $291. This has gone up. I thought it would start heading down, but it isn't. Up 6% year over year. So Ohio is a good example where, like, maybe because it's so inexpensive here compared to the rest of the country, but median sale price has not faltered this year. It's still, I would call, bullish, right? It's still on a bull run. I mean, it continues to just move along, and no signs of a price crash in Ohio at this point, at least in the big cities. But we'll see if we can find a price crash today on the other metros. All right, what's next? I got Imperial County, California. So I used to live in California, but I don't remember exactly where that is. Imperial County. Imperial County, California. New listings. And who requested this? Francis Scott requested this. All right. Well, there's not a whole lot of activity in Imperial County, but they are up 75% in new listings. But there's only 14 new listings, according to Redfin. Active listings in Imperial County. What do we got? Up 2.29%, only 179 new listing, or I'm sorry, active listings. So you've got a little more inventory than you did last year, but not a ton. Let's look at pending, see what they're doing. Pending sales. Wow, way down 56% in pending sales. So not a lot of buying and selling compared to last year. Now, where's the median sale price? We're going to look at active again. Oh, did I look at active? Yeah, 2.29% up. So it's swinging up, I guess, but you're just not adding enough new listings because otherwise you'd think active would be higher because pending sales have been so low. Let's look at median sale price. Jeez. Look at that drop. Down 10% year over year. $285,000. Is Imperial County, is that like headed out towards Vegas? Is that where that is? I may have my counties mixed up there. It was 439,000 a couple weeks ago, and now 285,000. It has to be because there's like no data. There's only like 14 new listings. I don't know. I'd get with a realtor if I were you to really pull the data there because I'm not sure Redfin is getting this right. Maybe it is. Maybe there's just no activity there. But man, the median sale price dropped big time. Seems like it's a lack of data, right? I think that's the case. New listings, you've only got what? 13, 14 new listings. So, maybe it's just a small populated county, but it seems like there'd be more on the market than that or more hitting the market than that. Okay, so that was Imperial County. I don't know if that really helped or not. Tucson, that should be a better one to look at. Tucson. Oops, I'm doing county. Got to do metro. Tucson, Arizona. New listings in Tucson. What do we got? Up 3% year over year, probably driving active listings down. Active listings are starting to go down, but shoot, you're up 20% year over year. Definitely a 4-year high with active inventory. So you should see more active inventory than you did last year, but it doesn't seem like it's, going straight up. It's not parabolic, as they say. Median sale price. Oops. Let me do pending sales first. Pending sales in Tucson up 10%. So more activity than last year. A little more activity. People buying and selling more. But median sale price in Tucson up 4% year over year, $371,000. That's pretty much like, where'd you peak? You peaked this year at 380,000 and started the year at 366,000. Now 371. So you're off a peak, but not by a ton. And it's kind of held steady all through the year, right? I mean, you don't see it going woo down like a trend downwards in price. Boy, Tucson's more expensive than I thought. 371 grand. Up 4% year over year. That's Tucson. What's next? Phoenix. It's kind of near there, right? And if you have a metro you want me to analyze, just drop it in the comments. I'll get to them in a minute. New listings for Phoenix. 14.8%. Okay. What's interesting is if you like Columbus was like this too. Look at how it's like, look at how seasonality says, hey, we're going to add less new listings every winter. They go down. People just don't want to sell during the winter normally. But look at them go up now in Phoenix. So maybe that's a sign of distress. I don't know. People are like, man, I've kind of held on as long as I can. I just want to get out of this thing and sell. We'll see. Pending sales in Phoenix up 11%. So more activity, but it's not a ton of buying and selling. Median sale price. But look at this. Up 4% year over year median sale price in Phoenix. $467,000. What's interesting about this is go back here to the beginning. They started at 447. Now, Phoenix is like a lot of metros that peaked in 2022. But as you saw, like in Ohio, we just looked at Tucson, they peaked actually this year in 2024. But some peaked in 2022, like Phoenix. They peaked at 488. They're headed back to the peak. They're at 467 now. Doesn't look like a price crash yet in Phoenix. It just doesn't. Again, I think you need a lot more new listings. I think all these areas do to see a price catastrophe. All right, let's go. We'll go to the next metro. Let me just look at the comments real quick. Just dive in here. Oh, here we go. What's up, James from Columbus on Facebook? Appreciate you joining. Inventory is up in Columbus. Yeah, it is. It is. We just looked at that. Yeah, there's no doubt. That's good. We need more inventory, James. Right? Got to have more. Got to have more good, affordable inventory too. I think that's what we're after. Hopefully hopefully we'll get it. Hopefully we'll get it. Thanks for the comment, James. Oh, San Antonio, please. Yep, I'll get to San Antonio. No problem. Give me a minute. I'll get there. Oh, I did Cincinnati. Did you see that? Groove Theory. But I appreciate you jumping on. Yep. I see people asking about Florida in here. Okay, I'll get to San Antonio. I will get to that one. And if I miss a metro, then just put it in the comments again, or after the live, drop it in. I'll do it next week. Oh, I did that one already. All right. Let me do Phoenix. No, I already did Phoenix. Got to do Pittsburgh. Sorry. Pittsburgh, PA. Somebody asked for Pittsburgh. Pittsburgh, PA. All right. Pittsburgh, PA, new listings, 15% up. So they're kind of, look at that. Everything's clustered right there. Really close together over the last 4 years. I mean, it's almost followed the same seasonality identically every year. Look at that. There's like not a lot of variation at all. That's different than a lot of other markets. All right. Active listings in Pittsburgh, PA, only up 4.5% year over year. See, I think places where inventory is really active, inventory is not up compared to last year. It's like flat or near flat at 4%. Those places are really going to struggle with prices from a standpoint of bringing them down. I got to think. Just need more inventory. Pending sales in Pittsburgh. What do we got? Up 8.7%. Okay. And what's median sale price doing? Yeah, look at this. Again, there's a big spread there, right? 7% up year over year, $225,000. So like if you look at the housing market from like a football standpoint, probably the most expensive market would be Baltimore, right? If you think about like AFC North, you've got Cleveland, Cincinnati, both of those, the median price is under 300 grand. Now you've got Pittsburgh, median price under 300 grand. So I guess if you want inexpensive houses, go to the AFC North, except for Baltimore. I got to imagine their home price is higher. All right. So median sale price not crashing in Pittsburgh. It's kind of following seasonality. It did peak this year at 256. Where did it start? 212. Okay. That's Pittsburgh. Milwaukee. Wisconsin. New listings up 9.5% year over year. Good. Need some more new listings. Looks like it may be headed up. Active listings. Jeez, look at this though. It's almost a 4-year low in active listings. What's that? What is that? Hard to get it on there. 1% up in active listings. That's got to be like, there's no inventory there, man. Wow. Wow. What else we got? Pending sales in Milwaukee. 4.2%. It's like a frozen, stuck market. I can't imagine it getting better during the winter. Just frozen. Nobody buying, nobody selling. Median sale price is probably sticky. It is up 10% in Milwaukee, 326 grand. Milwaukee's expensive. All right. That was Milwaukee. Let me do your, I think there's somebody who asked, San Antonio. I'll do San Antonio now. San Antonio. So this is supposed to be like crash central, right? I keep hearing that Texas is going to implode with the housing market. I keep hearing that. I don't live in Texas, obviously. So you'll have to tell us what you think, Talus, as we go through this. New listings down. Is that right? Geez, it is right. Down 10%. New listings down 10% year over year. I got to think you're going to have a problem having a housing crash in San Antonio if new listings are down 10%. But let's look at active. Maybe not. Let's look at active listings. Yeah, active listings now are only up less than 1%. Active inventory only up. It's less than 1%. I mean, like you need that active inventory to go way up, right? In order to have a lot more supply so that you can negotiate pricing, right? You're like, hey, I've seen 5 houses today. I like them all. I'm going to find which one I can get the best deal on. And then when that happens, sellers know that. They're like, oh, shoot, there's a house down the street for sale too. And they're, $10 less a square foot. And it's the same house we have. Uh-oh. Yeah, that's when people drop prices, right? Or they go in too high and they let it sit on the market. But they really need to sell. And right now, you'll find out who needs to sell versus who wants to sell. People who want to sell will just list their home on the market and not move the price. And when you call them to say, hey, we'd send in an offer, but it would be like 20% under what you're asking. No, we're not interested in that. Okay. Or they take it off for the winter, right? You'll see that. They take it off for the winter, put it back on in the spring. They don't need to sell. They just want to sell. Somebody who needs to sell, you're going to know it because they're going to drop their price if they don't get enough showings. They're going to drop their price if they're not getting offers. When you call them and you go see the house, when you go see the house, the agent is going to follow up with you like on a daily basis. Hey, what'd you think of that house? Your clients have any more interest? That you can kind of sense that, they're a little, I don't call them desperate, but they just need to sell versus want to sell. But when you have no inventory, hard to do that. Median, let's look at, pending sales here in San Antonio. Pending sales are up only 4.8%, but I wonder what the median price is doing. Median sale price, this has gone wonky. Look at this, up and down, 0% growth year over year, $303,000. So this is what I think a lot of people look at from a crash standpoint, right? They're looking at 2022 going, look at the price in 22. It peaked, it looks like at 337. Now you're at 303. So it's gone down $34,000 since 2022. And that is different than what we looked at in Columbus, Cleveland. I think Tucson was like that. Even Pittsburgh was like that, where we peaked this year, not in 22. So homes this year are more expensive than they were in 23, and 23 was more expensive than 22. Here in San Antonio, the median price, just median, is $303,000, but back in 2022, that was $337,000. Look at that. So that's an area where I think people are like, prices are crashing. I don't know that they're crashing any further, but they're definitely down from the peak. Like you were at 321 earlier this year. You were at 309 when you started the year. So you are less than when you started the year, right? You're actually down this year. So is that what you're seeing on the street there, Talus? I'm just curious. In San Antonio, it's zip code dependent. Right. It is. Right. I'm just kind of curious if that makes any sense to you, what you're seeing on the screen. Like prices aren't higher overall in San Antonio than they were in, like, I guess they're lower than they have been the last couple of years, right? But it is zip code dependent, I'm sure. That has to do with it. Yes, it does. Oh, okay, good. So it matches what you're seeing. That's good. You mean the data is not corrupt? Oh boy. Okay. That was San Antonio. Let's do, somebody else had on Coeur d'Alene, Idaho. Never done that one. So we're gonna do Coeur d'Alene, Idaho. Somebody requested that. It's spelled funny. I always mess this up. There you go. Coeur d'Alene, Idaho. New listings in Coeur d'Alene. Geez, up 27% year over year. A lot more new listings than last year. What's up with active inventory? You have a 4-year high on active inventory too, only up 2.55%, but more than you have had the last, 4 years. So more inventory overall. That's good. Pending sales. Let's find that out. Pending sales up 31% year over year. Holy cow. Realtors must be happy there. Median sale price. Geez. So this is similar to San Antonio, right? You've got 609 was the peak back in 2022. 609,000. Now 549. So it's dropped significantly, right? But you started the year, this year, at 524. Now 549. So it's gone up this year, but there was a definite basically crash, big correction, crash, whatever you want to call it, from where you were in the peak of 2022. I mean, look at that spike there. At that point, your prices were up 25% year over year. That's nuts. And then obviously that corrected. And it corrected all through 2023. Now you land at 549 grand. Okay, you said, what did you say about Coeur d'Alene? 549 grand is way over the median, 384. Oh yeah, for nationally. Right, it is. It is. You're right. It is over the median. And then you look at somewhere like what, Columbus, it's 350 something. No, I'm sorry. It's 330 something in Columbus. And then you've got places like Cincinnati or Cleveland where it's like 220 or 230. So I think that's why a lot of people, I don't know that people are moving to Cleveland necessarily, but a lot of people are trying to invest in Cleveland and Detroit and Columbus and Cincinnati because it's, you can buy a house for under the median nationally. I tell people that here all the time, like, this is cheap. Buying a house in Columbus is cheap compared to Coeur d'Alene, obviously. Yep, that's what you're seeing. Okay, that's pending sales. Great. What do we have next? Somebody else asked for another one here. San Antonio, somebody asked for another one here. Cincinnati, Florida. What is? Sorry, I'm just looking through to find out who asked for what. I swear somebody asked for one I hadn't done yet. Florida, can you Cincinnati? Oh, Chicago. Aha. Somebody asked for Chicago. Chi-town. Chicago, Illinois. New listings in Chicago. So look at that. Down 1.9%. completely different than the Coeur d'Alene, right? Where new listings, I think, were up 10. Is that right? But down. New listings actually down compared to last year. And it's not getting any better, it looks like. Active listings. Wow. Look at that. Who requested this? I'm sorry. I should have put this on the map or on the screen. Can you see Chicago high through? I don't know what that means. But Ramiro, if you live in Chicago, look at this. Look at the active inventory. Down 5.33% year over year. That's insane. Like there must be zero transactions. I mean, let's see, in pending sales. I mean, it's up 6.6%. So there's a little more transactions, but like you're just kind of, it doesn't seem like that's going to improve much because there doesn't seem like there's inventory. That's crazy. I was really surprised. Like some of these markets, how different they are, right? Look at median sale price in Chicago, 346, up 10% year over year. Like, so again, way different, right? When we looked at Coeur d'Alene and San Antonio, they peaked in 2022. But look at Chicago back in 2022, the peak of 2022 was 340 grand, but they actually peaked overall this year at 373. So this is why, and I guess the thing I asked at the beginning was, are you going to buy now? Should you buy now or should you wait? Well, if you're in an area like Chicago, it doesn't have any indication to me based on this data that prices are going to get cheaper. They will, though, overall get cheaper as we get further in the year. Meaning right now, today, it looks like the median home price in Chicago is 346, but back in the summer, it was 373. So that tells me, and this is, I think, true in most markets, if you buy in the wintertime, it's probably better than buying in the spring or summer, right? Just from the way seasonality works. So right now, like during Christmas, during New Year, people don't want to move. They don't want to monkey with a realtor. They don't want to sell. They don't want, me coming over, sitting in their living room and talking to them about their home price unless they need to sell, right? Most people who want to sell are like, I don't want to do that. And buyers are the same way. Buyers have a lot of family activities this time of year and it's cold out and, all that stuff. It gets dark really early. Like it feels like it gets dark at noon. So it's like, the point of that is it's probably better to wait and buy in this winter time, which we're in right now. But if you're in a market where the peak happened in 22 and home prices right now are less than they were when the year started, prices may get softer next year. But watch that new listing, watch the active listing inventory to see what's happening and how fast they're coming off the market. If homes are flying off the market faster than they're being added, prices probably won't come down. But if you're seeing inventory spike, particularly in your neighborhood you're looking to buy in the price point and the asset class, like if it's a single family house or a duplex, whatever you want to buy, if you're seeing that inventory come down, I would say prices will remain sticky. If the inventory spikes, prices may come down. But like in Chicago, it doesn't seem like there's any way or any notion that prices are going to decline overall. So winter in Chicago may be a good time to buy. Could be. Because maybe people aren't interested typically in buying and selling in the winter. I don't know. But this one peaked this year in Chicago. Now it's still up 10%. And then it's going to enter next year up compared to, I guess it'll enter 25 up compared to 24. And you're just going to start the whole cycle over again. Wow. I didn't know Chicago was like that. Thanks for suggesting Chicago. It's good to look at those. Chicago. All right. I've got a couple more here to do. I did that. Denver. Somebody wanted Denver on a previous live. Denver, Colorado. Denver, Colorado. Well, we'll start with median sale price in Denver. Yeah, look at this. So Denver now is 583,000. They definitely dipped from 22. They were at 617. But it's like, and they started the year at 558. Now 583. So homes right now this month are higher. The median sale price is higher than it was at the beginning of the year. One would think maybe they'll come down in the next month or so, but maybe not. Like, it's kind of been steady through the year, through this year anyway, but it overall has gone up. So in a market like that, does it make sense to wait? I don't know. That would be it may not make sense to wait. You may not get a better deal. I mean, look at the inventory now. Like, again, it's not going this way, it's going down, which it always does in the winter. But if there was distress in Denver, of like massive distress, you think you would see it in the active listings, right? With a lot of active listings. What about new listings? Yeah, look at new listings. It's up 11% year over year, but it's not going like over the last few months. It hasn't gone like that upwards. Am I going the right way? Yeah. Well, right. Upwards. So again, it's all zip code, school district, subdivision specific, but overall in Denver, it doesn't look like there's going to be massive relief if you just wait and to buy, Now, if you wait to buy to get, if interest rates happen to come down at all next year, which they may not, maybe it makes sense to wait. But I mean, that median sale price doesn't look like it's faltering too much right now. Like, you kind of experienced your dip maybe back here, right? Where it was 2022, 616 grand, and then it kind of went woo down. Look at that. Went way down. And it actually went down to 573 in Denver. And then ended the year in 2022 at 554. But then in 2023, started at 555, down, up, 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 and then followed seasonality. But then in 24, started the roller coaster back over again at 558, and now 583. So I would pull this specific info, median sale price. You could have this pulled for you from a realtor for almost any area. Like, a realtor can just draw on the MLS, at least in Columbus, he can. I'm sure they're like this in Denver too. You can just draw on a map like Zillow where you want to analyze, and then pull all this data to say, hey, what's going on in that market? And you can also get that from, like, you could subscribe to propstream.com. And I think I have a link in my description for it. And it's like $100 a month, but that has a lot of data that they pull from MLSs and public data to give you an idea of price trends. So that's not a bad idea too, if you really want to know and you don't want to monkey with a realtor, which I can understand. But anyway, that's Denver. Austin. I wanted to look at Austin again, because Austin's like the poster child for, look at this crash happening. Look at this median sale price thing. Look at that into Austin. This shows you, like, this is probably the best example of something like this, right? Where you've got a peak in 2022 at 571 grand. Wow. But I mean, look at the gap. Look at the gap, just completely out of bounds. Then it just dropped like a rock all the way and ended the year in 22 down 3% year over year at 459. So it started, or it peaked at 574 in Austin, and then all the way down to 459 grand. That's a crash. That's a big crash, quick, no doubt. But look what's happening now. In 24, you have prices starting at 440 grand, and they went up and down a little bit. They experienced a drop in the fall, and now they're going back up. Now it's 446. So homes, right? Yeah, I'm going to check that. Yeah, homes now in Austin, the median sale price anyway, is higher than it was at the beginning of the year, and it's up 4% year over year now. Like, I mean, I guess my point is, like, a lot of these areas had a big drop in 22, but then it's kind of gone steady or even up since then. A lot of these crash areas, they call them, whatever. So, like, houses are less expensive overall in Austin, I suppose. Maybe. I don't live there, but now they look like they're going back up. What's going on with new listings there? New listings are almost at a 4-year low. Look at that. New listings down 2.8% in Austin. But I should have shown this earlier on these charts. Look at this. Look at 2022 new listings. 14.8% growth year over year, a 4-year high. Like, they went parabolic up. I think that's right around the time that they jacked interest rates up a lot. People probably pulled the fire alarm, rushed to sell their house, threw it on the market. You saw a new listing spike. I'm guessing active listings spiked at that time. Yeah, they did. Look at active listings travel up, 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 right? And now they're headed down again. But the point is that you can kind of see that trend, and you should be able to capture the trend ahead of time if you watch those new listings. Right? Like, if I look at new listings, I can see what they were doing. Like, if I was looking at this market and I lived in Austin and I saw new listings start to climb like this and climb like this and climb like this, and then right here they took off, right? Right around this point here. When is that? April, end of March. They took off. They went whoop right up. Then it's like, uh-oh. If you see something like this in your market, could mean active inventory is going to spike and prices may suffer because of it. So that's Austin. Let's do Atlanta. Somebody asked for Atlanta last time. Atlanta, Georgia. Wow. Atlanta has a 4-year low on new listings right now, 3.2%. Just like Austin, they had a spike in new listings 2022, back in May, June, whatever. They had a spike in new listings. Active listings. Let's look at that in Atlanta. Oh, active listings. Yeah. Only a 3% year over year. And look what happened to active listings in 22, that black line. Look at it just go woo, right up. And that probably caused some type of price correction, I would imagine. Maybe not, but I would imagine. Yeah, look at the price correction on the black line. It just went down, right? So you didn't peak in 22, but in 22, you were at $404,000 in the summer or spring, and then it ended up actually $366,000 in Atlanta, up 6% year over year, right? But then reality set in, and people became locked into their mortgage, locked into their home when interest rates went up, and they're like, I ain't selling. And so new listings suffered, active listings suffered, and now median sale price, you can see where it is. It peaked this year, 420 grand, and now we're at 395. Again, always comes down in the winter normally. So, but it's not crashing anymore. You know, you don't see that huge downward swing to the degree that you did in 2022. Okay. I got one more here, unless somebody has another one. St. Louis. What? Is it period there? Oh. What? There is some, I think there's a, I don't know if it's a non-disclosure state or something. I've ran into this before. I think I ran into it with Kansas City. It wasn't on here. All right. Well, I'm going to do something different. I'm going to look at it a different way. This is, we'll look at Lance's info and see. So that's county level. That's 1 year metro level. I want this one. So this is what Lance Lambert puts out on Resi Club. You haven't checked out Resi Club, you should, because they have great data. This is actually paid information on a subscription, but it's well worth it. I mean, it's a great value. But he does it using this prices analysis is using Zillow, and his inventory data is using Realtor.com. Hmm. It's weird because he says circle size number of active homes for sale. Oh, he has inventory on here and prices. That's kind of cool. Oh, neat. He just changed this. This is totally cool. So let me go to Kansas City, St. Louis. Let me go. Look at St. Louis. Okay. St. Louis, 1 year change. I'm sorry, year over year price change in St. Louis, 3.3%. Shift since the peak. He puts that in this data. 2022, it looks like they're up 6.1% since the peak. 1 year change in home price, 3.3%. We know that. 2 year change, 8.5. Look at 5 year change, up 40% in the last 5 years. Active inventory for sale, 5,614. It doesn't show me the shift though. That's another graph from Lance. Actually, I can show it right here. Bear with me. Now, I don't know what county that they're in. I imagine it's here, St. Charles County, maybe. Lincoln County, is that where they are? No, it can't be that. Oh, there you go. St. Louis County. That made it easy on me. So in inventory for St. Louis, shift between November 2023 and November 2024. So 1 year change in inventory up 8%. This is using realtor.com data though, not Redfin data, just a different way to look at it. But you can see where inventory is gone. Like look at those numbers. 3,573 for sale back in 2016. Now they only have 1,800 houses for sale. They have less than they did in 2016. That's nuts. This information goes way back, right? So let me look at Columbus. I'm just curious what they have for Columbus. I haven't looked at this. So Columbus, the county where I am in Franklin County, up 32% in inventory for the month. I'm sorry, for the year on year, up 32%. That's a lot. As somebody pointed out earlier, have a lot more inventory in Columbus. That's good. And actually, if you go back to 2016, we still have less than we did in 2016, but we definitely have more than we did in 2020, and we're creeping up on pre-pandemic levels of inventory in Franklin County. That's good. I can tell you back in 2019, before the pandemic, we still didn't have enough inventory. So, we were in the basement over the last few years. At least now we're starting to climb out. That's good. I'm going to look at the county next to me. Or next to Franklin. This is actually the county I live in, Licking County, strange name, right? Up 26% year over year. This is the county where the new Intel plant's going. So they're already constructing the new gigafactory. I'll bet it's a lot smaller than it was supposed to be. It's supposed to be like $100 billion in 3 factories. Now it's like 1 factory and 20 billion. But it's supposed to bring a lot of, economic development to the area. I'll tell you what, home prices have gone insane here. Unfortunately, they have. So because of it, everybody's built in the Intel effect. All right. So that's Lance's info. But I thought that would be interesting for St. Louis. Okay. Anybody have any other ones? And then we'll look. Somebody asked for Knoxville. Let me go back to this map. This is kind of fun. Let's look at county level home prices. Metro level. Somebody wants Tennessee, huh? Knoxville. Sorry, I left that Chicago one up. Knoxville, Tennessee. I don't even know where Tennessee is here. Okay. Knoxville. Where's Knoxville? I don't remember. That's Memphis. Knoxville's over here, right? Knoxville, Tennessee. Here we go. Knoxville, Tennessee, 3.4% year over year change. Shift since the peak, 12%. So since 2022, you're actually up 12%. Look at the 5-year change in Knoxville. Look at that. 77.7% in Knoxville, Tennessee. 77% growth in home prices in 5 years. Like, how can you, that's not even remotely like comprehensible. Nuts. Jeez. Talk about pricing people out of the market, man. What's up with Nashville? This is an interesting one. Look at Nashville, down 2.9% since the peak. So like Austin, like Coeur d'Alene, some other ones we looked at today, you see that peak in 2022. Like those, Nashville is down 2.9% from the peak. But look at the 5-year change. 50%, 49%, who's counting at that point. So like, I guess that's one of the issues that I have with, or one of the problems, or I guess points of confusion I have in my brain when it comes to like people talking about a crash coming. Like even Melody Wright, who is maybe even like Nick Gurley at Reventure Consulting. I don't know if he does any predictions or not. I don't know. I don't think he does. Maybe he does. But they like think home prices are going to fall. But like, even if you came down 10%, you're still up. Like in Nashville, you're up 49% right now. In Knoxville, you're at 77 in the last 5 years. So if you came down 10%, whoop-de-doo, now you're at 67%. It's still insane, right? So like, it just would take a large amount of distress, cataclysmic distress, to see those prices drop so that, you know, somebody who bought 5 years ago has a lower home value than they did, than they do now, right? Or I'm sorry, somebody who bought now, that's not what I want to say. Somebody who bought 5 years ago lost value in their house as of today. It would just take a large shift, like a really large shift. And I hope you guys see that. We had like a decade of appreciation in like 4 years. That's not healthy. That's not healthy. Let's look at Florida. Can I get Florida on here? Hang on, stand by. Okay. Now let me zoom into Florida here. All right, here's Florida. Let's look at that. So here's an area like Punta Gorda. I'm gonna have to zoom in a little bit here. Punta Gorda, Florida. I hear Lance talk about Punta Gorda a lot. Year-over-year change down 7.3%. Shift since the peak down 12%. So since the peak, they're actually down 12%. They're down 7% since last year. Look at the Look at the 5-year change though. Look at the 5-year change in Punta Gorda of prices. Up 52% still. Still up 52%. Again, not sustainable. Wow. So you think there would have to be a correction there, right? But again, to come down and take away all that growth that you've had over the last 5 years, prices are going to have to come down a ton, like a ton. I mean, you know, cataclysmic drops. Can it happen? Sure, anything can happen. Will it happen? I don't know. That's a lot of distress that's needed. Let's look at Fort Myers. Same thing, right? Since year-over-year change down 5.5, since the peak down 8.4, 5-year change 58.9. Like it again, it just needs a ton of distress, probably a ton of inventory to hit the market. Marco Island, same thing, down 3 year-over-year since the peak, down 4.4, 5-year change 67%. So you see this on the news, right? You see the media cover Florida and Austin a lot. They cover Tennessee too. People like seem like people love talking about Tennessee. Like as you hear those narratives of like prices are falling in Marco Island and Naples. Sure, they are, right? Year-over-year since the peak, they are down. That's probably healthy. But when they've gone up 67% in 5 years, what does it matter? Like 3%, 4%. So what? That's not a big deal. Now, I guess it'd be a big deal if you bought in the last year. You'd be like, oh no, my house, lost value, but in the last 5 years, it's gone up a ton. So that's that on this. Miami. Huh. Look at this. They're up 2.3% year over year. Since the peak, they're actually up 8.4%. And in 5 years, 63%. You can go on and on these metros, right? Anyway, Lance does a great job with this info. It shows you really where the pain is in the market. Like, look at, whoops. Apologize for I wanted to look at the Northeast real quick, and then I'll probably wrap up. Yeah, like look at the Connecticut area. Let me do this one. Yeah, look at Hartford, up 7% year over year since the peak, since 2022. So they didn't peak in 2022, obviously, because prices are still going up. 17% since 2022, 5-year change, 58%. It would seem like waiting there to buy wouldn't help at all, right? And that's clear as day. Like, I'm going to wait around for the housing crash. Man, you'll be waiting forever. Because, I mean, and look at the active inventory, only 1,200 units. So, like, there's no inventory there. I know that from looking at it. I think inventory there is down like 70%. I think it's down 70% in inventory. So you can't, since 2019. So like no inventory, high prices, waiting doesn't seem to make sense. But like Punta Gorda, should you wait? Marco Island, should you wait? Yeah, maybe if you waited till next year, maybe there'll be more distress and you can actually pick up a deal. But it's not going to be 2019 prices. That would be like a 50% discount. So anyway, hopefully that makes sense. What do we got? Florida demand was huge in 2020, dropped since due to hurricanes and insurance costs. Yeah. Yep. Oh, somebody asked her. Rhineland attitude. Okay, sweet. Can you do a smaller market such as rural northern Wisconsin? Rhinelander, Wisconsin. Rhinelander. Is that how you say that? Wisconsin is probably the largest, closest city to me. If that doesn't exist, maybe Wausau, Wisconsin. Did I say that right? Wow. I don't know if I said that right. I don't think I did. Some of those cities up there, I always butcher in like Wisconsin, Minnesota. Funny story. I actually went to, I made a sales call in my previous life on a customer in Winona, Minnesota. And somebody said, when I got ready for my trip, they said, you have to go see Winona. And I was like, where do they live? And they were like, no, that's a city in Wisconsin. Or I'm sorry, a city in Minnesota. So Winona, Minnesota. All right. But you want Wisconsin. All right, let me look at that. So you said, where is it exactly? Oh, right there. Look at that. I found it. Sweet. 6% year over year in home prices. 14% since 22 you've grown. 40% since 2019. So it looks like it hasn't grown like to the level that Miami has or some of these other markets we looked at a few minutes ago, but it has gone up 40% in 5 years, but you're still going up. Like year over year, you're at 6% growth. Let me actually, since you asked for it, let me do this. Give me 1 minute and I'm going to get us some inventory information there. I wasn't going to do this, but now I kind of want to. Because you asked about it. Active housing for sale. I just need to pull this other chart. There we go. That's what I want. So this is active inventory. And this is kind of better to look at, I guess, than charts probably. But it's just not Redfin info. So that's why I usually don't do it on the updates every week. 1 year change in active housing inventory. So this will kind of tell us what's going on with inventory. So I'm going to call it Wausau, Wisconsin. I doubt that's right. Shoot, I moved off of it. There we go. All right. So inventory. So you've grown since November 2023 to November 2024. You're up 14.8% in the number of homes for sale. But look at 2019. In 2019, you had 688 homes for sale. And now you have 240 homes for sale. I mean, there's nothing. I mean, yeah, you're way down in inventory there in Wisconsin and up in prices. So like, again, a market like that, does it make sense to wait to buy? Like if you have to wait because you need to get your finances in order, or you have to sell your current home, or, you know, whatever, you're saving your money. I understand that you have to wait. But like, if you're just waiting to buy because you're hoping prices will drop, in a place like this where inventory doesn't look like it's back to pre-pandemic levels, even close to it, and barely up year over year in the number of units. And you can see prices have gone up 6%. They're up whatever double digits since 2022. The chances of you getting any significant deal, if just by waiting, if you hunt, you can find a deal, but just waiting may not be a great idea. I'm not saying you shouldn't wait, because every little market's different, but it doesn't seem like prices are crashing there. But that's just what I'm seeing on the map and whatnot. So I hope that helped. That was a cool little market to analyze. Thank you for that. All right, what do I got? Well, somebody wants to do. Is this live? Yes, it is. At least right now. Somebody asked for Buffalo, New York. You know what? That's a great idea, because there's something going on also in New York I wanted to look at. Was it Syracuse, New York? I heard there's some crazy stuff going on in Syracuse with the Micron plant. All right, so let's look at Buffalo first. Where is it? Buffalo, right here? Yeah, there's Buffalo. Look at Buffalo, up 5% year over year. Shifts since the peak, 9.2%. Which I keep saying peak, but there wasn't a peak in 22 because obviously prices are still going up. But since 22, you're up 9.2%. 5-year change, 52.8%. So Buffalo looks like it keeps going up. I think Zillow voted Buffalo the best housing market for 2024 at the beginning of 24. I don't know if that's true, but that's what they had. Buffalo was in there. Columbus was in there too. All right, let's look at inventory and see what's going on with inventory in Buffalo. There's Erie. There's Buffalo. So Buffalo, you're 8.9% more active inventory in Buffalo than you had last year. But let's look at, and look at 2019. You had 1,900 homes for sale in 2019. Now you've got 1,200 homes for sale. So you added a little bit more inventory in the last few years, but it's not like cataclysmic, or I don't guess it's not, a ton of inventory. It's not like loads of inventory hitting the market. Probably, if you see new listings spike a lot in Buffalo, that may be a hint that active listings could spike, unless people buy the active listings. But it doesn't seem like there's a crash there. Maybe buying in the winter, you may get a deal, but you could also just really hunt for a deal off market, right? And I won't go over that today, but I do on a lot of my videos as far as how to hunt for properties off market. Who else has one here? All right, I'll take one more, and then I got to wrap up. How long has it been? Oh, man, hour and a half. Holy Toledo. Can you break down? Okay, somebody asked for Rhode Island. Rhode Island. Yeah, Rhode Island's like, before I do Rhode Island, though, sorry, I'm going to do, I'm just going to hit on Syracuse. Syracuse has 25% more houses for sale than they did last year. They're at 864 units. Back in 2019, they had 1,600, 1,700 units for sale. They're definitely adding some inventory, which is probably good. But I want to look at prices though, real quick there. Prices in Syracuse. I keep forgetting where they are. Where are they? Where's Syracuse? Come on. There you go. Yeah, look at this in Syracuse. Now there's a Micron plant going there. That's what's going in. I had somebody on my channel ask me about this. Ask me about Syracuse. And they were complaining, saying home prices in Syracuse have gone so freaking insane that it's completely depressing. And you can see it in these numbers. Year over year change, 9.6% increase year over year. That's a large increase. Most increases we're seeing, and we are seeing like 6-7%. Nationally, you're at 6, so 9.6 is higher. Look at the shift since the peak, 19%. Look at the 5-year change, 62.5%. Like, it's just gone insane. And I think like locally where I am in Ohio, it's like the same situation where you've got, Intel coming in, and all of a sudden people just add the Intel tax to your house or to their house. So you talk to them one day and they say, oh, well, I'll take 200 grand for the house. Then they hear about Intel and they're like, nope, it's 250 now or 300. Whoa, that's a big increase, right? So Micron probably is doing that to Syracuse. Syracuse is a cool city, though. I like it. Somebody asked for Rhode Island, though. All right, let's do Rhode Island. I don't even know. Where Rhode Island. We want to do, let's do Providence, I guess. 6.8% increase year over year, 11% since 2022. Increase in home prices. 56.2% increase since 2019. 56%. Yeah. Prices there are just look unhinged completely. Let's look at the inventory. Inventory, you're up 14.9%. That's good. That's good. But look back in 2019. This is nuts. 4,421 units for sale, houses for sale in 2019. Now 2,008 houses for sale. So it's like a lot. I mean, it's what's that? Less than half of the number of homes for sale compared to just 2019. And you were dropping then. Like, look, you were at 4,400 units then. And the year before you had 5,400 units. So yeah, I mean, I guess there's probably no new building there. Any new building there is probably super expensive. I got to think like a custom home, right? Only. It's not like a sprawling development. So the Northeast is like probably going to be the most sustained price, explosion in the country. It could be like Rhode Island, Connecticut, New York, Massachusetts, Vermont, all those places. So yeah. Oh, somebody look, you guys are like, you guys are goading me into this. My weak spot now. I am the housing nerd. So you're like, watch this, watch me torture this guy and keep asking for places. Texas. Somebody wants Texas now. All right. All right. I did Austin earlier, but that's okay. Let's look at Texas. We'll do inventory first. Then I'm done. I promise. You want, let's see. Let's do Houston. Inventory first. 24.8% increase year over year in inventory. That's good. Adding some inventory, but this one is, look at 2019. You've got 28,000 units for sale. Now 27,000 units for sale, almost 28,000. So like you're almost at pre-pandemic levels in Houston. But look at the number of houses for sale there versus like some other areas. There's tons, a lot of new construction in Houston. Sprawling developments. What are prices doing there? What are prices doing? Oh, that's a county level. I want metro level. Let's look at prices in Houston. Year over year, up 0.5%, basically flat. Since the peak, So they peaked in 2022, it looks like, down 2.4%, still up from 5 years ago, 37.7. And I think, again, that's where people like, they see that you're only up 0.5% year over year. And since the peak, you're actually down, and they go, see, home prices are falling. And it's like, yeah, they've gone down 2.4% in 2 years, but they're still up 37% in the last 5 years. To be fair, the average increase, I think, over the last 20 years, if you run it all out, according to the most data providers that I've seen, it's like a 4 to 6% increase every year. So if you're doing 37 or 38% in 5 years, and typically it's 5% historically price growth, or 4% every year, that's a lot more, right? 20% compared to 37% or 38%. So, like, just because they've dropped a little bit, there's still a lot of growth over the last 5 years. But this could be an area, I would think, because you're almost at pre-pandemic levels. You've got prices look like they're softer than they have been in the last few years as far as growth goes. Maybe that's an area where waiting could help, possibly, right? I don't know though. It has to be you have to look at your specific subdivision, your specific market. Whoops, sorry. So that was your Texas there, Anthony De La Rosa. Right on. Thanks for joining. It's not sustainable with these prices. It's not. I keep hearing that. I agree. It's difficult. No doubt. But like, some of these areas, it could be the normal. Like in the Northeast we looked at. I mean, will prices drop in 5 years to where they were 5 years ago now? I don't know. That would be a really, really big drop, right? So some of these areas, this could be the new normal. And essentially, prices won't maybe do anything. Like nationally, I think prices will be like 2-3% maybe. In fact, since some of you are still on this thing, and I appreciate you hanging on, I'm going to show this before I wrap up. So you keep goading me into things. This is like, I compiled this of all the different experts, right? And what they think will happen in 2025. I also put down what they said would happen in 2024, what actually has happened in 2024. So this column here, this first column D, is the source, the data provider, or the expert, whatever you want to call it. And then 2024 is what they thought would happen. 2024 actual is what really happened. And then what their call is for 2025. Now, people have asked me why this number is changed, or why this is different for all these different providers. It's because they all use a different data source. And I did my best on this. So some of them I had to like really dig in to say, all right, like Morgan Stanley, they say we would be down 3% this year in home prices. According to what Morgan Stanley uses, the data they use, what I could see is that we're up 3.85%. Their call for 2025 is a 3% growth in home prices nationally, the median home price nationally. Same with National Association of Realtors. So some of these data providers just use different sets of data, obviously. Like Redfin's going to use Redfin. Zillow's going to use Zillow. Some of these use Case-Shiller. Some of them have their own housing price index. So I have all the different folks down here. When you average it out, I think the average for next year is, whoops. Sorry, hold on. It's not letting me get what I want. I don't know why it's not working the way I want it to. It doesn't matter. I'll do this. I'll do that on another video. But you can see where they think 2025 is going to land, right? Like some of these are like normal forecasts, like 3%, 2%. Moody's thinks negative 0.4%. Sorry. A couple of these are outliers though. Look at Apollo Global, 10.8% growth year over year. That's what they think is going to happen to home prices. I couldn't find their call for 2024, but they are saying, hey, home prices are going to skyrocket next year. I don't know. That's kind of nuts. And if you keep going down here, you'll see Melody Wright's call. She thinks home prices will be down 10% in 2025. Is that the case? I don't know. We're not there yet, but we'll see. I think I have the housing nerd on here. So here's my call. I thought prices would be up 5% this year. That's what I did on a video late 2023. Actually, we're up 4%. I got to update this because now Redfin has us up 6%. That's what I was going on as Redfin data because I look at it every week. But so I missed the forecast. But I think 2.5% is normal. Like 2.5% to me is like, well, it's actually a little under normal historical averages, but like 2.5% is like, all right, we're just going to kind of slug along. You're going to have areas in like Connecticut and Rhode Island, I think, where prices are going to go nuts or keep going higher. But then you're going to have areas like Coeur d'Alene, Houston we looked at, some other areas where prices may soften somewhat, Florida, and it'll kind of bring everything, down. But I don't look for home prices to go up in insane amount. I don't think they'll crash. And I think transactions will be flat or a little under 2024. I think next year we're not going to add a lot of new transactions unless there's a lot of distress from like unemployment or if interest rates drop a lot, hopefully not. But if interest rates drop again, that could either bring back a lot of sellers. It could bring back a lot of demand though, which would be horrible. Horrible. If money got really cheap again, like there's a bunch of people on my channel who say that they're waiting for prices to crash. So if that's true, and there's a bunch of people waiting for prices to crash to buy, and prices do crash, or there's a bunch of distress in the market, or interest rates drop a lot, you'd think those people would start buying then. You'd think, right? So will demand come back? Will sellers come back? Hard to tell exactly, but I don't think, given everything just kind of going status quo, I don't think we'll see a lot of excitement in the housing market next year. It'll just be kind of, hum-ho. How far are you from Negley? I don't know what that means. I don't know that. Is that a city? That's a city. I don't know that city. She is the insider on delinquent data. I assume you're talking about Melody Wright. She is. Her like delinquency data and mortgage knowledge is awesome. I love listening to her talk about like behind the scenes mortgage stuff. I do think she's really scorned with like something that had happened maybe back in the GFC she was involved in. And she's like, man, and Travis is kind of the same way. Like they want the evil real estate people, whoever those people are, to like suffer big time, right? And you can see it in the way they operate. So from that angle, I don't really take much stock into her opinion. But from a mortgage standpoint, she does a great job, and she's really helped me understand a lot of what's going on with like FHA mortgages and delinquencies. I'm going to do a delinquency video, I think tomorrow, because I got the new Black Knight information. And there's definitely more delinquency in mortgages. Not a lot of more foreclosures, but there is more delinquency. And actually on that video, it shows you where, like the forbearance and the modifications, like the volume of modifications and forbearance. It's a pretty good report. So I'll share that tomorrow. No Trump enthusiasm. I don't know what that means. I don't know what that means, but that's okay. I'm sure you'll tell me. Anyway, that was a long, man. Wow. That was a lot of data, a lot of stuff, but thanks for joining me. Thanks for the comments. Somebody asked me to break down SoCal before I forget. I'll do that on the next one. Agent Crypto. That's pretty cool. Pretty cool name. I'll do it on the next one and next week. And so tune in for that. But I'm tapped out, man. I've done a lot today. So, all right. Thanks for joining me. Thanks for the participation, all the comments, all the suggestions. If you think somebody could benefit from this type of information, share my video. I'd really appreciate it. And if you haven't subscribed, maybe do that too. All right. I'm the housing nerd. I'm out of here.